Hello friends, how are you? I hope all of you are doing really good. So welcome to another session of the CMA revision series paper number 8, right? And we have moved on to the recording pattern now instead of the live session because there were only very few students who were joining in live. So we have moved on to the recorded part. Okay, so what we are going to do in this particular part is we are going to discuss about job costing, batch costing, unit costing, and then we will be covering the contract costing also. That is the most important one. Contract costing. Job costing, if I talk about job costing, it is very simple that you have to prepare the cost sheet for a particular job, right? The job is a small job which can be completed within a specified period, within let's say a month or two, right? And you have to find out that what should be the selling price or what should be the price that is to be charged for that particular job, right? So job costing is done. One second. So what he's saying is that job costing is done when we want to determine the selling price of a particular job in hand at the required profit level. Let's say there is a person who comes to you and he says that please make the Indian jerseys for me, right? The Indian cricket team jerseys for me. So that is a particular job. That is not your routine job. And you need to find out that at what price you should be selling to that person, right? So how will you find out? If you know the cost of that particular job and you know what is the profit that you want to earn. If you, let's say you say that you want to earn 20% on the cost, right? So in order to determine the selling price, we have to prepare uh, the cost sheet for that particular job, right? We have to prepare. The format of the cost sheet remains same as discussed above. That means as discussed in the chapter of the cost sheet, as we have discussed in the cost sheet, the format remains absolutely same. The only difference is now it will be for that particular job, that what is the raw material consumption cost for that job, what is the direct labor cost for that job, what is the overhead, factory overheads attributable to that particular job, what is the administration overheads attributable to that particular job, right? So everything will be from the viewpoint of a particular job. After that, when we are talking about unit costing, it is about calculating the cost of one unit, calculating the selling price of one unit, again by preparing the cost sheet. Let's say you are preparing a cost sheet for 20,000 units, right? You are preparing the cost sheet for 20,000 units. Now if you keep on dividing the cost by 20,000, what you will get? You will get the cost for one unit, right? So unit costing is done in the industries manufacturing a single product or a range of similar products. So where it is applicable, this is important from the MCQ point of view, sir, that the unit costing, where can you apply the unit costing, sir? It is possible only in the industry where a single product is being manufactured or where a similar product is being manufactured, right? In unit costing, the total cost, profit, and the sales value are determined by preparing a cost sheet, and then the total values are divided by the number of units produced to determine per unit cost, right? Total cost divided by number of units. Now, be careful here. When you are talking about selling and distribution cost, at that point you have to be careful with one simple thing. What is that one simple thing, sir? That is, you have to take total selling and distribution cost divided by, here you have to take a number of units sold and not produced, right? To calculate the per unit cost, in this case you have to take the number of units sold and not the number of units produced. Please be careful with this thing, right? After that, the batch costing, again you prepare the batch cost sheet. The batch is what? You are manufacturing a t-shirt and you manufacture 100 t-shirts together in one single batch, in one single lot. That everything, whatever the process is happening, the process is happening on all the 100 t-shirts, right? So you try to find out the cost for that particular batch, what should be the profit level, what should be the selling price for that batch. So everything is done. Where a single or a similar range of product is being produced, again important for the MCQ purpose. Then he says the batch consists of collection of number of units that are together entered into the production line. That 100 t-shirts are being manufactured, they are together put into the production line. The cost sheet is prepared for a batch to determine the total cost and the selling price of a particular batch. Now in this particular batch costing, one important topic is this economic batch quantity. That if you want to prepare a batch, if you want to do the production of the number of units in a batch, what should be the batch quantity? How many units should be clubbed together in one batch? How many units should be manufactured together in one batch? That is again a question, right? That is answered by economic batch quantity. It is similar to economic order quantity. There we used to take up two costs. One is ordering cost, another one is carrying cost. And here we are again taking two costs. One is the setup cost per batch, that what is the cost that you have to incur when you have to set up all your tools again and again for the batch. Everything is required, everything is needed to be set up again for a new batch. The second thing is the carrying cost per unit of the FG. Now this is the major difference here, sir. And A is the annual demand of the finished product. When we were talking about the economic order quantity, there I told you that you have to be careful with one thing, that in case of economic order quantity, we are talking only and only about the raw material. If anything is mentioned regarding the finished goods, you have to be very careful with this thing, right? But in this case, in case of economic batch quantity, you have to take finished goods, right? So you have to take, we are talking about the finished goods here. So the EBQ is 2 into A is the annual demand of the finished goods, S is the setup cost per batch. There we used to take ordering cost per order, and C is the carrying cost per unit of FG per annum. Right? Instead of RM, here we are taking the FG. And if you want to calculate the other formulas also, that is the relevant cost will be setup cost plus carrying cost. Right? If you talk about the relevant cost, so relevant cost will be annual setup cost plus the annual carrying cost. Annual setup cost plus annual carrying cost. Then you can calculate number of batches also. Right? That is annual requirement. That is annual requirement divided by EBQ. Right? Annual requirement divided by EBQ. So this way you can calculate the various things as we have done same in the material costing, sir. Same as done in the material costing, same way you can do it here also. Right? So this is about the EBQ. Now coming to the most important topic, one of the most important topic, that is contract costing. The first question that you might ask, or that the institute might ask in any form, in the form of a theory question, in the form of an MCQ question, that what is the difference between the job costing and the contract costing, right? So you have to be very careful with this thing. This is one important question, that difference between job costing and contract costing, right? All those who are having my books, I have already given this question there. Right, so first try to understand what is the basics of costing, that it is undertaken for the big projects involving the huge sums of money. This is the first major difference. Sir, the money involved in the job costing is comparatively smaller than what is involved in the contract costing. Right, in jobs it might be in the lakhs, and in the case of contract it will be in the crores. So the major difference here is the big project and the small project. Another thing, the job will be completed within a period of a few months. The contracts may go on for years and years. Right? Another major difference between job costing and contract costing. Right? Third difference, the job is undertaken at the site of the manufacturer. At the site of the manufacturer and not at the site of the client. If you want to make a t-shirt, you will make a t-shirt in your factory and not in the client's factory, right? But in case of a contract, the contract is undertaken at the site of a client. If you want to build the building, right? If you have a contractor, if you have a contract of making a building, then it is not possible that you make a building at your place and then take out the building and put it in some other place, right? At the client's place. No, sir, you have to do the work at the client's place. So this is the third major difference between job costing and contract costing, right? So you have to remember this thing. The project is undertaken at the client side. Already told, sir, there are two parties to the contract. Contractor, that means who is going to do the work, and the contractee. Contractee is whom? Who has given the work, right? He will be doing the work, he will be given the work. Now contract costing is done from the viewpoint of whom? It is done from the viewpoint of the contractor, from the viewpoint of a contractor, to know his profit and loss from the contract, that whether the contractor will earn some profit or not from the contract. For example, building construction contracts, highway construction contracts, etc. Right? And if any one of you guys need this, this is my capsule edition from where I am teaching, is the cost accounting capsule edition for the quick revision. If you want the soft copy of it, you can get it from our mobile app KSJ Teaching. The link is given in the video description. For the app, you can download the app, go to the costing book section. There you will find the soft copy for a nominal amount, right? For a nominal amount, you can get that copy, but that will be viewable in the app itself, right? You cannot download and print it, sir, for the security reasons. Now, how will you fix the contract price, sir? How will the contractor? Obviously, the material will be used, labor cost will be there, direct expenses will be there, factory overheads will be there, office admin overheads will be there. There will be no selling and distribution expenses, right? Because he is not going to build it and then going to sell it or distribute it. No, sir. Right? So you have to be very careful here with that. No selling and distribution expenses in this case. Clear? Plus desired profit, contract price. Now, the most important part is the preparation of contract account. This will be asked in the examination. If something is asked from the contract account, the preparation of contract account. Right? So contract account is a nominal account. It is a sort of mini profit and loss account only, because what we are trying to identify, sir, we are trying to identify that what is the profit or the loss being made by the contractor, right, from a particular contract. So how will you find the profit or loss? It is being identified from the profit and loss account only, right? In this case, we call this profit and loss, mini profit and loss account, or we call it as a contract account. It is a sort of profit and loss account because the profit and loss account is prepared at the year end. Contract account can be prepared anytime during the year. Secondly, this particular contractor might be going through with the various other contracts, might be going through with 3 or 4 contracts. Profit and loss account is prepared combining all the contracts. Contract account is prepared to find out the individual profit and loss from one particular contract, right? Okay, to profit and loss from the contract, this is what we need to find out. So this is the contract account. The first thing is he will buy the material, sir. What will be the entry? Contract to material purchase. And if it is returned, to material returned. Similarly, sir, we have already understood the entries in the cost accounting systems, right? In the similar way, there are entries in the contract account, right? The same way entry. If the material is transferred from the store, then what will happen, sir? It is as good as you are buying the material. It is as good as you are buying the material, sir. So material transfer from the store, and if it is returned back to the store, material returned to store. Material transfer from the other contract, you need a material which is neither available in your store, neither available nor available in your market, right? So what you do, that material is available on some other contract, which is not required there. So you get the material from there. And if from this contract side you are sending the material to some other contract side, that will be material transferred to other contract, right? So when you buy the material, what is the entry that we have done in case of this cost accounting system? That is SLC to GLA, isn't it? SLC to GLA. Now, if you talk about, forget about this. Okay, forget about this. Just think about the profit and loss account, trading and profit and loss account. Now, if you buy the material, what will be the entry here? Here you will put 2 purchases. And if it is the return, what will you do? Here purchase return or sales, right? Here you will write all the receipts of material. Here you will write all the issue of material, isn't it? This is what you will be doing, right, sir? So this is what we are doing here. Now, if there is any sale proceeds of the raw material, let's say one of your friends who is also a contractor, he comes to your site, he says, yeah, this material I also require, please sell it to me. You charge whatever you want to charge, right? So there is the sale proceeds of the raw material that you have to take. If there is a profit on the sale, you have to book it here. That is the profit on the sale of raw material. And here the profit and loss account, if there is a loss on the sale or loss on the sale of material, or if there is a theft also. right? So this is all regarding the material, which is very, very important. Now coming to the labor cost is there, direct expenses are there, works overhead are there. Now very important part regarding the plant and machinery. Now if you are going to purchase plant and machinery, specifically purchased, right? Then what is the WDV of the plant and machinery specifically purchased? What is the net effect of this part? Basically, in the profit and loss account, we do not take the purchase value. Please listen to it very carefully, because this is one major mistake that many students commit, or this is one major confusion that most of the students have, that sir, why are we taking the purchase of plant and machinery in the profit and loss account, whereas we do not take the purchase in the profit and loss account, right? Sir, on the debit side, we are taking the purchase of plant and machinery, and on the credit side, we are taking the WDV of the plant and machinery, right? The net effect of this is we are basically charging the depreciation. The depreciation we book in the profit and loss account or not? Yes, sir. The depreciation we book in the profit and loss account. So depreciation is the purchase price minus the WDV. What is that? The depreciation, sir, right? If you sell the plant and machinery, the sale proceeds, if there is profit, book it, if there is loss, book it, right? Then depreciation of the plant and machinery not specifically purchased. For example, there is a plant and machinery, which is available on some other contract which is worth 1 lakh rupees, right? And on 1st of April, you got this plant and machinery to your site, right? And you used it for 3 months. Let's say till 30th of June, for 3 months, you have used this plant and machinery on your side. So on 1 lakh rupees, the depreciation of 3 months will be charged to this particular contract. For the remaining months, it will be charged to some other contract, right? To depreciation of the plant and machinery not specifically purchased, WIP, work certified, uncertified, the calculations we'll just discuss, the higher charges, the other expenses. Now what is important here is, one, the material part is important. Secondly, you have to be very careful with the plant and machinery calculations, right? That is one very important calculation. Clear? So from here you will get the notional profit or the loss. Simply, if there is a loss, it will directly be taken to profit and loss account. Simple. But if there is a notional profit, why it is called a notional profit, sir? Because we cannot calculate what is the exact profit until and unless the contract is fully complete, right? And as I told you, that contract account can be prepared in between also. For example, this contract started on 1st of April, right? And you are closing your books on 31st of December. Now this contract will go up to 31st of December next year. Let's say it is 23 and it will go up to 24. At this point, when you are preparing your contract account, can you identify what will be your exact profit and loss here? What will be your exact profit and loss here? Can you identify? No, sir. You cannot identify what will be the exact profit and loss account here, right? Because still 1 year is pending. You do not know what is going to happen in the next year. The material prices might change, the labor prices might change, the overheads might change. So here, whatever the profit you will get, that is known as notional profit. This is known as notional profit. That it is not a final profit, but yes, we are expecting this profit to happen as on date, right? Then from that notional profit, some part is transferred to profit and loss account, some part is considered to be fixed and taken to profit and loss account, some part is taken to the reserves part, that we are not sure whether it will happen or not. Let's keep it in the WIP reserve. How to identify how much part should be taken to P&L, how much part should be taken to WIP? For that, the rules are there. Clear? So this is the contract account basics. Now, how to calculate the work in progress? This is very important. This calculation is very important, sir. This is again important point. And sometimes you get a small question on this only. Sir. Okay, what is the value of work certified? Work certified is the percentage of the work certified into contract price. Let's say if the contract price is for 10 lakhs rupees, right? And the engineer will come, right? And check the work of the contractor and he says, okay, sir, it seems like 40% of the work is done, sir. 40% I certify that 40% of the work is fully complete, absolutely okay in all the terminologies. Now the contractor will say to the contractee, sir, okay, now you have got it certified, please pay me 40%. Right? This is work certified, means the work which has been certified by an expert that it is complete. Right? So the percentage of work completion certificate is issued by an expert of the field. Now it is on the contract price. Why it is on the contract price? Because the part which has been certified by the expert, that much will be now payable by the contractee to contractor. Now if it is 40%, that means 4 lakh is now due from the contractee to contractor. Contractor will go and he says, sir, 40% is complete and certified also. Please give me 4 lakh rupees. Now, whether contractee will give him the 4 lakh rupees or not, that is again a question. That progress payment. As I told you that 4 lakh is due, 40% certified, 4 lakh is due. The contractor goes to the contractee and he says, sir, as the 4 lakh is due, please pay me 4 lakh rupees. The contractee says, no. If I give you the full money, that if I give you 4 lakh rupees, you might leave the work in between, right? And then what will happen, sir? He says, I will pay you 3,50,000 only. I'll pay you 3,50,000. What is the balance that he is keeping? 50,000 rupees. Now, this 3,50,000, this is known as progress payment. This is known as progress payment, and this 50,000 is known as reserve money. Right? This 50,000 is known as reserve money. Clear? So you have to be very careful with the calculation of this, because individual questions can be asked on the reserve money and the progress payment and calculation of WIP. Then what is the value of the work certified? What is the value of work certified? That it is the cost of the work done till the end of the reporting period minus here, add here the cost of work certified. Cost of the work certified. Let's say, sir, this is the period. You prepare your books from 1/4/23 to 31st of March 24, right? This is your books period. Now on 31st of December, 23, you got some part of the work certified, right? This is where you get a certificate, work certified is equal to 50%. Let's say the contract price. Just try to understand this part, very important. Contract price is 10 lakh rupees. Right? Contract price is 10 lakh rupees. So here you have got 50% of 10 lakh. So what is your work certified? Work certified is 5 lakh. Now what is work uncertified? When you are closing the books here, whatever the cost which has been incurred in this part, whatever the cost has been incurred in this part, sir, right? It is not yet certified. Whatever the cost has been incurred in this part, it is certified, isn't it? Let's say up till here, the cost incurred is 4 lakh rupees. This is the cost. I'm talking about the cost. I'm not talking about the contract price. What I'm talking about is only the cost, right? And I say on the total project, the expected cost to be incurred on this in this particular period, not on the total contract, in this particular period, what is the total cost incurred? That is 6 lakh rupees, right? So now if from 1st of April to 31st of March, total cost incurred is 6 lakh. Out of that, what is the cost which has been certified? That is 4 lakh. So what is the cost which is not certified? This 2 lakh rupees of this period, this is known as work uncertified. This is my work uncertified. So out of the total cost which has been incurred till date minus the cost which has been certified. How will you calculate the cost, sir? The cost has been calculated from here. What is the material cost, material transfer, return, net cost, right? Net cost, you will have to find out what is the cost that is incurred. Cost of work till the end of the reporting period. How will you find out this cost? This cost will be cost to be calculated from contract account. cost to be calculated from contract account, right, minus cost of work certified. Clear? So this is a very important part. Now, so this was regarding the WIP. Now you need to find out what are the rules based on which you transfer the money from notional profit to P&L and to WIP reserve. That depends upon your percentage of completion. That means how much of the project you have completed, because more the completion, more will be your accuracy of identifying the profits. Then in that case, more profits you will be able to take to the profit and loss account, and less will be kept in the WIP reserve, isn't it? So in case of loss, the entire amount will be taken to profit and loss account. There is no issue. But in case of profit, you have to find out what is the percentage of work certified to contract price, right? What has been certified to the contract price, then amount of notional profit to be taken to P&L. If it is less than 25%, that means very less work has been done. Nothing will be taken to P&L, because at this stage we are in no position to identify that how much of the profit we will be able to make from a project, right? If it is more than equal to 20% but less than 50%, then what you have to take? 1/3 of the notional profit multiplied by cash received to work certified. He says if the work certified has been 4 lakh, but you have received a cash of only 3,50,000. So how much of the profit you can book? Sir, which you have actually received in cash. Something which you have not yet received in cash, how can you book your profit on that? Right? So 1/3 of the notional profit into cash received by work certified, and equal to is here. Be very careful. If it is exactly 25%, again you have to apply this, right? If it is more than equal to 50%, less than 90%, then 2/3 of the notional profit, because the more and more of the project is getting completed, we are nearing the completion of the project, and as we are nearing the completion of the project, we will we'll be able to better identify our profit. So 2/3 into notional profit into cash received by work certified. If it is more than equal to 90%, less than 100%, then it is expected profits, estimated profit, sorry. It is estimated profits multiplied by cash received divided by contract price, right? Why so, sir? Why we are not taking here work certified? Why we are not taking here work certified? Because now we are absolutely near to the completion. We are nearing the 100%. When it is 100%, sir, that means the work certified will be nearing 100%. The work certified nearing 100% means the contract price only, isn't it? So NP is notional profit, cash receipt, work certified, and contract price. So this is how you have to calculate that how much of the amount is to be taken. Estimated profit, I'll come to that. What is estimated profit? Estimated profit is if your contract, let's say it started on 1st of April 23, you are closing your books on 31st of March 23, right? And you are expecting this to complete on 30th of April 23. 95% of the project is complete here, only 5% is left. So how can you estimate the profits? The estimated profits is what is the cost actually incurred plus the estimated cost. Here is actually incurred cost, here it is actually incurred cost, because you are sitting here for the next a month, right? For the period left, you will try to find out what is the estimated further cost, right? So that will give you the total cost on the contract price. So what will be your estimated profit? If you want to find out your estimated profit, EP is what? EP is the estimated profit. Estimated profit will be contract price minus actually incurred cost minus estimated further cost. This is your estimated profit. Clear? Okay, so after that there is a small balance sheet, and always remember, in case of contract costing, there is only an extract of balance sheet. There is no exact balance sheet that we can prepare. The balance sheet will not tally anyhow. There is going to be only an extract of balance sheet. The fixed assets, in the current assets, WIP, work certified, cash received, reserve, material at side, P&L account if it is loss, P&L account if it is profit, right? And the accrued wages if any wages are outstanding, and if any expenses are outstanding, you can take it here also, right? Then estimated profits, I have already done you. Contract price minus the cost of work done till date. That means this one, right? Actually incurred cost minus the further estimated cost. Then escalation, de-escalation clause is very simple. We have done a question on that also. Sir, what is escalation clause? The contractor says if during the process of construction, the prices change, the prices of the material or the prices of the labor change, then I will increase the contract price, right? So at the same time, the contractor says if the prices decrease, you will have to decrease the contract price. The contractor says okay. This is known as escalation or de-escalation clause, because the contract is going to happen over a period. It is over a longer period. It may happen for 2 years, 3 years, and the contract price was fixed at the very beginning based on the prices which were prevalent at the beginning only, right? Which were there, the material prices, labor prices. Now nobody knows what is going to be the price trend over the next 2 years during the contract, right? The prices might increase, the prices might decrease. Now nobody wants to suffer. If the prices increase, the contractor will suffer because he will have lesser of profit. Then if the prices decrease, the contractor will suffer, isn't it? So in that case, the escalation and de-escalation clauses put into the place. But you have to remember one thing: escalation and de-escalation clauses only and only for the change in the prices. If there is any change in the quantity being used or the number of hours of the labor being used, no escalation or de-escalation clause. This is one major difference in this, right? So a clause by the name of escalation de-escalation clause is entered into an agreement between the contractor and contractee, which provides that in the case of cost of the basic inputs, that is direct material and labor increase, then the contractee will compensate the contractor on account of increase in cost in accordance with the agreement. Further, in case the cost falls, the contractor will compensate the contractee by charging less amount as may be agreed upon. The escalation claim due to the contractor will from the contractee will be credited to the contract account, right? That means if you are preparing the contract account, here you will write by escalation claim, right? And if it is the reverse of thing, claim of contractee from contractor will be debited to contract account. Now write one more thing here, that escalation clause, escalation or de-escalation clause is valid only for change in the prices, change in prices, and not for change in quantity, and not for change in quantity, right? So this is very important, sir. This is very important. So this was all about, sir, contract costing. This was all about the contract costing. Please remember the small points that I have told you that you need to be very careful with, right? So this was all about contract costing. So we have covered job, unit, batch, and contract costing. In the next lecture, we'll be covering about the process costing and the joint and byproduct. Then we'll move on to the standard marginal budgetary and service, right? So see you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.